Hey everyone, welcome back to my channel. First off, thanks for your patience during my recent absence. I'm finally at a point where I can focus on YouTube again and will be catching up on messages and comments. I recently released some free indicators on TradingView in an effort to include everything I use to trade in one primary indicator. Unfortunately, due to some TradingView limitations, I couldn't add in volume profile and regular volume, but it does include everything else. I've had some incredible P&Ls using the concepts in this indicator, so I want to do a couple videos showing how to apply it so you can fully duplicate the same level of success. I still use other trading services such as TradingView to complement the chart and build a watch list, but the reality is you can be very profitable on ES, NQ, YM, and RTY using just what I'm about to show you. Even trading just 5 micro contracts at a time, the past 2 weeks for me have consistently netted me over $7,000 in profits per week. I'll be sure to also do trade recaps on some of my biggest days to help reinforce these concepts after I release a video on how to identify if the day will be a range session or a trend session. I trade the range and trend sessions very differently, and it's a concept I should have covered a lot sooner, but I'll be sure to get that in the next video. Before we get started, I'll leave several discount codes for trading services I use in the description, including Sonar Labs, TradeEdX, and Elite Trader Funding. Lastly, if you enjoy this content, don't forget to like and subscribe to help me grow this channel. It really does help out the channel. With all that being said, let's get right into it. So I'm going to pull up TradingView, and on this chart right now, I'm looking at MES, which is one of the primary instruments that I trade. And you can see I only have regular volume and periodic volume profile, which I've done other videos about how to use these, and I have another one coming up soon on a great way to use it to separate range and trend days. So if we go up top and we search indicators, and I'm going to search convert ETF, and you'll see the one by K Facken, which is my actual last name, and you'll see convert ETF strikes plus SMC plus higher time frame levels right here. Now, I should note, TradingView took down my original indicator because I mentioned my YouTube channel in the description, so that's been resolved, and I'm hoping they don't take it down again, but I will put a link in the comments so you can copy the code manually in the event that happens. Now, if we click on that indicator, it's going to take a second to load because there's a lot of concepts put into this indicator, and all of a sudden it looks like a mess when you first pull it up, but all of this data is super useful. So we want to go into the settings here. And the first thing we want to do is choose the ETF that we're converting from. So if you're trading on ES or MES, you should convert from SPY. If you're trading on NQ or MNQ, you should convert from QQQ. If you're trading on RTY or M2K, you want to convert from IWM. Or lastly, if you're trading the Dow on YM or MYM, then you want to convert from DIA. So I'm going to leave it set to SPY, and then SPY actually closed at 375 on Friday, this past Friday. So I'm actually going to set that as my opening strike price, even though the reality is all this is doing is these lines you see on the chart, the white lines, are taking the SPY's price and it's looking at the current ES price on the chart, and it's getting a difference of the two by dividing ES by SPY and then multiplying that difference by 8 levels by the opening strike price you select here, as well as 8 levels above and 8 levels below to determine these levels on the chart. So we can set this to 375. If we have a super volatile day and we go 8 levels above or 8 levels below, you will have to adjust this throughout the day, but for the most part 8 levels should be enough. Now, you can set your line width, and you can also set this table positioning, which in the bottom right corner, I choose to put it. Super useful because that shows SPY's current price, so you know when you're looking at the chart and you're curious, okay, what level am I actually approaching? You can look at SPY's current price and then determine that pretty quickly without having to look at SPY. The other thing I include on here is VWAPs on both. So if we're looking at ES and we have SPY selected as the ETF converted, I put on both the SPY VWAP and the ES VWAP, so you don't have to do that as a separate indicator. That's very useful because I've talked about in the past how the VWAP is, I use it as a very strong level, and if we have rejections off the VWAP, we usually get a nice bearish move. If we have holds on the VWAP to the upside, we usually get a big bullish move, and those are very useful because oftentimes we might not necessarily respect the futures VWAP, but we do respect SPY VWAP or vice versa. And then line smoothing is essentially because the difference, that value that I'm calculating changes, I have to smooth out those lines to make them more like look like levels. I actually had to use moving averages here because oftentimes I did a video in the past to talk about how that difference between SPY and ES was about 10.06, but that does slip from time to time and fluctuates from 10.04 to 10.07 sometimes. And so the reality is it's a moving target, but it changes slowly. So therefore, these white lines are actually moving averages, even though they look like levels. So that's it for those converted levels. And basically you play these just like you would a level. Now, oftentimes, for instance, level 375 will typically be a big gamma or Vanna level, and it will act as a magnet. And we can see this white line here. And also if you want to change the styles on those so you know where the big levels are, you can go into styles and we can say, okay, my starting level, uh, let's just make this one thicker. So we know exactly. Okay, so this thicker line is going to be 375. If you have a way to check gamma exposure and things like that, which I use TradingView for, you can go and mess with the styles of these lines to make the big gamma levels stand out to you. And so I'm just going to sit that back for now. But that's just something I wanted to point out. You can also do dotted lines and things like that if it helps. Typically, the big levels are going to be every $5. So 370, 375, 380. And you can see here that especially if we drop to the 1 minute, you can see how SPY's, we'll give that a second to load up, how well SPY's price reacts to these levels. So this is also why I include a volume profile, because value areas can also act as levels, which we see here. The red line is the value area high, which we could see it was acting as resistance before we finally blew past it. But even at the start of the day, as we start falling below, you can see that, and I also do put up NQ side by side because sometimes it will respect NQ's levels. And just to show that real quick, on the right here we have NQ, same ticker. I selected QQQ, and in this case my opening strike on QQQ is 265, which if you look at the box in the bottom right, we can see SPY QQQ is currently at 264, so I just did 265, did 8 levels above and below. And the same deal we can see here, where in this case on QQQ we actually rejected out of an order block, which I'll talk about shortly. And then as we start falling below, we start defending particular strikes on QQQ moving higher. This is a good example of how both these gamma levels became support and resistance, and then it actually ended up being NQ's VWAP, which is this blue line that helped them move higher. But we can see as we come to these key strikes on both ES and NQ, these are actually SPY and QQQ strikes that are acting as resistance. And we can see here, we get that a couple times throughout the chart. Also, as we start getting, one thing I really liked around the end of the day, as we can see here, is as we moved higher, as we started climbing, we made a low of day, and we start climbing from there, forming order blocks and fair value gaps. We can see that every time we'd break one of these SPY levels, we would retest it, move higher, break a SPY level, retest it, move higher. And these start creating perfect entry opportunities where you can even set limit orders at these levels, looking for a retest, giving yourself a stop below this fair value gap per se, and then moving higher. So let's talk about those fair value gaps and the other smart money concepts that I'm showing here. So if we go back into settings and we scroll down past the ETF conversions, so then we start getting into the smart money concepts. And there's things you can do here, change stylings based on trend, which I don't usually do. You can show internal and swing structure, which is, if you're not familiar with smart money concepts, I highly recommend checking out some of my other videos talking about swing structure and internal structure. And it essentially has to do with higher time frame structures and bullish characters and bearish characters and things like that. I always choose to show both, and I always choose to show order blocks from both. So you can see I'm showing 10 order blocks from each. These are the colors. So bullish order blocks are blue, bearish order blocks are red, and then same deal for the internal and swing, blue and red I chose for those colors, which you can certainly change. I do show equal high and lows which will automatically show on the chart. Let's see if we can find an example. So if we see right here, let me zoom in a bit. We can see right here. So that was a change of character. Break of structure, break of structure. That's what these dotted lines are showing here. Break of structure. Whenever we have those, we have order blocks created. Now you can see here, this is an equal high, and that's what it looks like. And the idea behind equal highs, which I've talked about in other videos, is that oftentimes smart money likes to use those as areas to blow out newbie traders. So typically a newbie trader will see a double top and they'll set a limit entry here for when we retest it. Well, smart money loves to blow it out and then actually move in the original direction to eat up that liquidity. And we can see that's exactly what happened in this case. So I like that it points out equal highs and lows for me. Again, you can turn that off if you don't want it to assist you with that. The other configurations we have here are, actually this should be 10. We can set fair value gaps, which are very useful. Those get created whenever we get buyers or sellers are in complete control and we get large candle moves up or down. Those fair value gaps can oftentimes act as support and resistance, which I can show you examples of shortly. I choose to use sort of a greenish yellow for bullish fair value gaps and then a purple for bearish fair value gaps. And I extend it all the way to the right to make sure that they show up as the day progresses. I also like to show highs and lows from different time frames, daily, weekly, monthly, just to know if we're approaching those, because oftentimes those will act as major support and resistance. And now I choose to leave this off, but the premium and discount zone uses Fibonacci's to help you determine if you're in a discount zone, it's a good time to buy or exit shorts, or if you're in a premium zone, it's a good time to sell or exit longs. And it uses Fibonacci to determine that. Again, I leave it off, but it is very useful for smart money concepts. And then lastly, I have it go through and I edit this indicator. It looks at these time frames. It looks at the daily, the 4-hour, the 1-hour, and the 30-minute by default. Now you can turn on 15-minute, 5-minute in your current time frame, and it will automatically find levels for you based off the strongest pivot points. And it will only show the strongest ones that it can find. And let me show you what those look like. I have those as a gray color because I don't want them to get mixed up with the gamma levels we have on the chart. But let's see if we scroll up here. Yep, here's an example. So you can see here we have a 1-hour level, which was clearly acting as resistance here. It didn't play too much of a part earlier in the day, but it's still useful to have those levels. I do feel that the white lines, the gamma levels, are typically stronger. And the order blocks are as well. But when we see things like levels from the daily chart, those can be very good. Here's a 30-minute level that's showing, and those are labeled for you, so you know exactly which time frame that level came from, meaning you shouldn't really have to go to higher time frames and draw your own levels because it will find really solid levels for you. Now, going back to some of this, now I'm not going to replay this whole chart because I just wanted to cover the configuration in this, and of course you can also change the VWAP colors if you'd like. So we have the futures VWAP and the ETF VWAP. Actually, you know what? I need to add that in here because I just realized I don't have an option for those colors. So I'll have to add that in as an input. But if we could look here, so let's take this last hold on the day and just talk about how we could play this using all these concepts. So we have the volume profile, and you can see as I zoom out here, this green line below is coming from my volume profile, and it is the value area low on the day. And it actually looks like we're going to break it. But let's talk about what actually happens. So what ends up happening around noon is we had this big fall, and then we hold. And not only do we get a break of structure, meaning we broke this previous high right here, but because it was a previous high that was broken, so we made a higher low and then a higher high, that means it creates an order block, which is shown by this blue rectangle, which is typically a great point to enter in longs when we have these order blocks. Not only is it just the fact that we have this order block, but we have several areas of confluence because we have the value area low, we have an order block, and we have a SPY gamma level, or one of the SPY strikes here. So we have 3 reasons why we could take longs here. and it's especially useful when we're in bullish character. However, when we're in this sort of chop, it can be difficult to trade. When you see this nastiness here, I typically like to stay out of it. However, setting limits order in this zone and then having a stop loss below this, I would recommend anywhere from 3 to 4 points below this gamma level. Entering in this order block enables you to get in as soon as possible. I'll talk about why we have extra confluence with it being a range session in the afternoon in a follow-up video. I'm not going to get into that here, but when this session opened at 1:15 p.m., it was a high likelihood we were going to trade within the value areas, and I will cover that soon. Now, what happens is when we get down to the order block here, we get this high volume big move up, meaning there is some buyers here, but it gets rejected. Sellers slowly fall back down. Now these candles indicate weak selling, which is adding to the confluence, which means if we're patient and we're waiting for good entry points, which would be gamma levels and order blocks, we should be able to get a nice entry. So sure enough, it comes back down here and we start moving higher. We break the value area low, we retest it, we move higher. As we do so, we create these fair value gaps from these this shows buyer strength right here, meaning there's not a lot of selling happening, which is very similar to the initial time we touched that order block, which means it's extra confirmation that there's institutional buying in this zone. So this is confirming what we already expected. Institutions are taking over. What's really nice about this fair value gap is that once it's created, we come down and as we retest it, we get an immediate buy up, which is shown by these candle wicks. We start moving higher. We get an official change of character, which means now that we're in a bullish character, we should only be looking for longs, in my opinion. You can do counter trend scalps, but that's more dangerous, and I wouldn't recommend that, especially based on your trading skill level. And then we get several opportunities to take longs. We can see we break this SPY gamma level, come back, retest it, and hold. At any point in this area, you could take longs to move higher. We create a fair value gap, we retest it, move higher. Another great entry point. We break this gamma level, retest it along with the fair value gap, and move higher. And we can see even though the VWAP is acting as resistance, which would be a good exit point, we can see that we keep trying to push into it, that buyers do exist and they are trying to push above this VWAP. And once we do, you can certainly use this as another area to break and retest if you missed any of these prior entries. As we move higher, we create new order blocks because of the break of structures shown here. We hold this gamma level as resistance, come back, perfectly hold this order block gamma level VWAP area, which again is another beautiful area to enter in. These areas, I love when we have a combination of an order block that ideally created a fair value gap on a gamma level that's right in the VWAP area. It's usually great entries that you can get off there using limit orders with high confidence. You can see it does take 2 tests, but once we get that second test, we just continue moving higher. We get more break and retests, more entry opportunities, and then finally the day close out. Now, at any point, depending on when you enter these, in my opinion, this area could have been challenging, especially for newer traders. But once we got the change of character, getting that extra bullish confirmation, you could have entered at 37.36. You could have entered at 37.46. Could have had some great entries around the VWAPs, in particular around 37.56, or even if you're sort of late with it, late in the day, we have 37.66. So depending on where you enter, and if you gradually trail it, meaning let's say we got in here, we had the change of character, we enter the break and retest off of this order block here, and we start taking that higher, so 3736. And even if we just, every time we break a gamma level, we trail it and we leave a little breathing room using the fair value gaps or other order block areas and sort of let it play out and maybe scale out of some of our position to secure our profits, but also leave some runners or even look to re-enter as we retest to add more positions. It really depends on your style of trading and your level of expertise. You can see it never at any point changed character to a bearish character. We just kept having break of structures, reinforcing this bullish character the entire time. Meaning you could have certainly slid this, which is actually something I did take advantage of on both SPY options and ES futures, micro futures, and call it over 30 points essentially. And that's the power of this indicator, is that it shows all these entry opportunities using gamma levels, but convert it from ETFs using VWAP, using order blocks, fair value gaps, and you combine it with volume profile, and you get the full power out of it. So anyway, I'm gonna do some follow-up videos with some real trade recaps on this stuff and do some replays with it, and then also talk about how to identify trend and range days. But hopefully you found this helpful, and hopefully you enjoy the indicator. Thanks for watching.